There are a lot of people out there that still are buying Bitcoin, and I think that fact is lost sometimes because you're focused on the ETFs, you're focused on strategy and other treasury companies, Strive, and everyone else. But there are just normal people buying Bitcoin every day. There's raw demand. There are the plebs that are DCAing every single day, every week, every month, and other big holders that are not publicly talking about it that are accumulating too. So net of it all, I would say we're still in a very good situation with Bitcoin. It's just the broader market sentiment seems to be looking at other things, right? The current thing. And that's just an opportunity for people to understand Bitcoin.
Mow points out that many people immediately focused on headlines suggesting that Michael Saylor had sold 32 Bitcoin. The story quickly spread across social media, creating concern among investors who have long associated Saylor with the never sell your Bitcoin philosophy, but Mow argues that this headline completely distracted people from a much larger event occurring simultaneously. At the time of the market decline, geopolitical tensions involving Iran were escalating. Historically, global uncertainty often causes investors to reduce risk exposure across various asset classes, including Bitcoin. Interestingly, Mow noticed that many algorithms and news feeds appeared to emphasize the Saylor story far more than the geopolitical developments. As a result, investors began connecting Bitcoin's weakness to Saylor's sale rather than broader macroeconomic concerns. In Mow's view, this interpretation is inaccurate. 32 Bitcoin is an insignificant amount relative to the holdings managed by Strategy. More importantly, this was not the first time Bitcoin had been sold for strategic financial purposes.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
Well, the most important thing to know is it's all over. We're going to zero. Saylor's selling. So panic, sell everything, sell all your stocks too. Just wrap it all up.
Yes, that's the feeling out there.
Yeah, I don't know. Well, I think today there was a drop. There's a dip because of the Iran conflict, which is funny because, we had a team call around the same time for Jan3 Monday team call, and we were wondering what's causing the price drop. Why are we down? And the only news that we all saw was that Saylor sold 32 Bitcoin. And then, we searched a bit more and we found, okay, it's the Iran conflict escalating. So there's this odd disconnect right now where the algorithm is not promoting the conflict at all. And we have to actually search for it proactively to see what's going on, which is just really weird, right? But the thing that does pop up is Saylor selling the 32 coins. But I don't think it's a big deal. It's 32 coins. And this is not the first time that Strategy has sold. They have sold in the past, I think, for tax loss harvesting and tax optimization. So I think people are angry that Saylor didn't follow his sound bites that, never sell your Bitcoin. But, that is more of a rule of thumb that you don't sell your Bitcoin willy-nilly for no reason or because you're fearful. You can sell your Bitcoin, obviously, otherwise there will be no economy, there will be no circular economy, and there's no need for Bitcoin wallets. We don't need to make Aqua, we don't need to do anything, we just all accumulate. But it is a tactical move to sell Bitcoin in his case because he needs to have a channel to fund the dividends on the preferreds. And I don't think it should be unexpected. Either he'll dilute common or he will sell Bitcoin, but eventually something has to fund the dividend. It doesn't get funded out of nowhere. And even in the case of the Bitcoin bonds that I designed, there was a mechanism too. So a nation state would buy Bitcoin with the capital raise, but they will also sell or mark to market Bitcoin to pay back the principal, firstly, and second, to share upside. So selling Bitcoin, there's nothing wrong with it as long as you're not selling for the wrong reasons. If you're a net accumulator, which Strategy and Saylor will be, then it's fine because he's selling a little bit of Bitcoin to buy more Bitcoin. And what he's doing is stripping out the volatility. And it's the same case for the Bitcoin bonds. You strip out the volatility for a different investor class, a different segment of investors, and you can sell some of it to pay the dividends and net gain Bitcoin in the end too. This is not the first time we've heard these sort of fear-mongering type posts, and I just don't think that's the case. I mean, we've been hearing for ages about the mining death spiral. You know, when miners shut down and prices down, more miners will shut down, and it's just going to continue down forever and go to zero. And I don't think it's the case at all for Strategy and all the different holders of MSTR, STRC, and BTC. I think it works together very well. Again, the instrument strips out volatility and taps into a new asset class. And you know, people don't like that Saylor says MSTR is amplified Bitcoin. But it is true. It is amplified Bitcoin. It is amplified Bitcoin in both directions. When Bitcoin goes down, MSTR goes down more. When Bitcoin goes up, MSTR will go up more. It is amplified, whether you like it or not, and it's not only one direction. So I think the balance works out, and I don't think a lot of people can see how it works out. They're making the wrong assumption on various things. Like, they're assuming the dividend will never decrease, and I think that's a mistake. And they're assuming that Bitcoin won't go up, which is also a mistake too. So I think net of everything does work together well, and it is a very well-oiled machine. Now, the part about Saylor buying back bonds, buying back debt, I think people just don't like the idea that he's not buying more Bitcoin, right? But it is financial planning. It is corporate planning of how to manage finances, and I think it is. I didn't read all the details into it, but I'm pretty sure it was net accretive to shareholders by buying back the debt at a discount now. So I guess to all the haters, you have to just ask yourself, like, if you're that good at financial engineering, then how come you don't have this vehicle on the market that is buying massive amounts of Bitcoin, getting to 1 million coins soon? It could be that people are rebalancing their portfolios in anticipation of some of the big AI company IPOs coming. I think SpaceX is one that people are really salivating over, and then there's Anthropic and everything. But you know, these things come and they go, and it's not a sure thing that buying the IPO is a good idea, especially at these valuations. These are very, very high valuations. But you know, people are generally sheep, and they follow what's the trendy thing to put your money into. And I think it's just that Bitcoin is not the trendy thing right now, and that's probably what's keeping us down. But this is the opportunity for the true believers to accumulate. There are a lot of people out there that still are buying Bitcoin, and I think that fact is lost sometimes because you're focused on, you know, the ETFs, you're focused on Strategy and other treasury companies, Strive and everyone else, but there are just normal people buying Bitcoin every day. There's raw demand. There are the plebs that are DCAing every single day, every week, every month, and other, you know, big holders that are not publicly talking about it that are accumulating too. So net of it all, I would say we're still in a very good situation with Bitcoin. It's just the broader market sentiment seems to be looking at other things, right? The current thing. And that's just an opportunity for people to understand Bitcoin. So if you look at the AI stocks or even tech stocks in general, all of those companies eventually have to store value somewhere, right? Like, if you look at SpaceX, they have Bitcoin on balance sheet. If they successfully do their IPO and they raise a bunch of capital, or Nvidia or Anthropic, they have a lot of revenues and they want to keep their money, eventually someone has to reach that same conclusion as Saylor did and realize that keeping your money in fiat money is a melting ice cube, and it'll come back to Bitcoin. And when those big players start moving back to Bitcoin, the retail investors will follow. Well, I wasn't subtweeting Odell. I saw a lot of sentiment. Like, I just scroll sometimes and I don't know who said what, but that was my summation of what the general environment is towards everything right now. And as you said, you know, when things are going sideways, everyone wants to pick a fight with someone else, right? We're not happy at this time. But yeah, I've seen someone say the ETFs were the worst thing that could happen to Bitcoin because we've had, I think, 11 days of outflows now. But you know, everything that flows out must flow back in. It's just like the tide. It ebbs and it wanes sometimes. And I think people were also critiquing like nation states buying Bitcoin and politicians rug pulling and not delivering. And I think that's my take on the whole vibe. And obviously some people are mad at the orange ties too, but permissionless neutral money is for everyone. There's that saying, Bitcoin is for enemies. So you can not like that people are using Bitcoin in a certain way, but that's just the nature of the beast. And I think Iran is now taking Bitcoin for insurance on ships passing through the Strait of Hormuz. Is that okay? If you can define what anybody, any nation, or any company can do with Bitcoin, then there's a problem there. You've gone right back to the fiat system, and that's exactly what they do. When Russia attacked Ukraine, okay, well, we're gonna cut them off, So I don't think people realize what they're saying when they're saying it. But if you want neutral money, you have to be okay with neutral money.
Mow also addresses criticism surrounding Strategy's stock, commonly viewed as a leveraged Bitcoin vehicle. Many critics argue that Strategy introduces unnecessary risk. Mow's response is simple. That is exactly the point. Strategy is intentionally structured to provide amplified exposure to Bitcoin. When Bitcoin rises, Strategy often rises faster. When Bitcoin falls, Strategy often falls harder. This amplification works in both directions. Critics frequently focus only on the downside while ignoring the upside. According to Mow, many investors are making flawed assumptions about how the system operates. Some assume dividends will never change. Others assume Bitcoin's price will stagnate. If either assumption proves wrong, their entire analysis collapses. Instead, Mow believes the various financial instruments within Strategy's ecosystem work together as a carefully designed machine that expands Bitcoin exposure to different classes of investors.
And that does mean that companies like Strategy will build products, and maybe Saylor will say something like, we turn Bitcoin into money. And it doesn't really matter. He's saying something. It's a marketing thing. And you should just let him say it. It doesn't change the fact that Bitcoin is money. I've had people reply to that thread and say, well, we need to fight for Bitcoin and make Bitcoin money. That's not how it works. What are you going to do? Use Bitcoin as money harder? Spend harder? I don't know what you do. And then someone else critiqued and saying, well, nation states mining Bitcoin, do you approve of that? And I'm like, yes, the nation states mining Bitcoin is a good thing. And he quoted Mises and said, well, it's crowding out the Bitcoiners and they're getting less Bitcoin because nation states can mine at a loss and all that. But these are all very good things. But exactly how does your feelings about it impact the world? Yes, you can disapprove of a nation state mining Bitcoin or holding Bitcoin, but does that change anything? Because nation states want what is valuable. If it wasn't Bitcoin, it would be bottle caps. Let's say we all traded bottle caps and we thought bottle caps are great. The nation state would want bottle caps eventually because that's what they need. They want money, and Bitcoin is money. So it's a natural evolution that they will want Bitcoin or to mine Bitcoin. But you can complain about that all you want, but it doesn't really change anything. And I think actually it's like thinking a few steps ahead or playing 4D chess, right? If every nation state is mining, that guarantees the decentralization of the network because they'll just have a mining operation and they won't even know it's there. I mean, just think of how many systems are still running in the government that are not looked after anymore. They're just tucked away in some office somewhere, churning away. No one knows how to maintain it. No one even knows it exists anymore. That's kind of the end goal, that you have Bitcoin mining everywhere and countries are mining and they're just securing the network. And actually that will protect it from attacks because they're not actively participating in attempts to change things or upgrade things, right? It kind of gives you this safety cushion. And also getting countries or nation states to adopt Bitcoin in some way is separation of money and state. Separation of money and state is not that you starve the government and you bankrupt them by not giving them your Bitcoin, because they have a monopoly on force. They can get money or financing in many, many ways, even restriction of your movement across borders. But if you can separate the printing ability, that actually starts to trigger a cascading effect of positives, which is you have a system now based on sound money, on hard money that cannot be duplicated and printed. And that has trickle down effects, like the people in the government will understand money better, and they will have better informed policies, and they will tend towards the Bitcoin ethos and towards freedom. So it's a really subtle thing, but I think people miss it, and they're looking at a very obvious thing right in front of them, which is, this group that I don't like is using Bitcoin. Well, I need to be outraged. Agentic Aqua is two things packaged together. It's a CLI interface to interface and manage your wallets, and it's also an MCP server too. So you can kind of point your agent to set up a wallet and start transacting. So we did a demo where we made an agent wallet and had it buy something over Bitrefill, which is kind of cool. But I think the future is really going to be agentic commerce. People will just delegate that part of their lives away. And, it is a hot wallet, but, so is your wallet on your phone. And that's what Aqua is too. It's a mobile wallet, it's a hot wallet. An agent wallet is a hot wallet, but a little bit hotter because an agent can do things with it. But I think it's acceptable if it's smaller transactions and you top it up every so often. You can risk losing $100 because your agent bought something by accident. And people will also buy things by accident too. So I think once the norm is spread and people understand the power of using agents to conduct business, then I think you're going to see more and more people just allocating that part of their lives, delegating that part of their lives to agents. So that's largely the reason to build Agentic Aqua, because we see this is the frontier. Your own wallet, hardware wallets, those will still exist, but a good chunk of your life will be done by agents. Payroll could be done by agents, right? And there's different things that we can evolve the agent into with better checks and balances and things like that. But definitely it is going to be largely autonomous in the future. And I think we just pushed an update out today for Agentic Aqua, where you can now swap Liquid USDT for other stablecoins over Sideshift and Changely. And there's more stuff coming down the pipe. But yeah, it's a definitely very exciting time. And the world is in a very interesting place of change where everything is happening seemingly all at once.
Yeah.
I've got an interesting setup. I'm using a lot of different things right now. I'm using Claude just within the Claude app. I have my own setup using some open source stuff, and I'm also using Cursor. So I'm kind of just jumping between all these different tools depending on what I'm doing at any given time. And there's pros and cons with everything. The whole tool set is not that mature yet. I think the real breakthrough will be, I think Claude might be able to do it, but it is allowing cross collaboration with AI. So if you look at the Claude desktop app, you can sort of collaborate, but it's not really collaborative yet. You can't collaboratively edit documents. You can't edit inline manually. But once it gets there and it's like Google Docs, but with AI augmentation that is multiplayer, I think that will be a big productivity shift for organizations. You can kind of jury rig it yourself, but there's no simple out of the box Google Docs type interface right now, it seems. But yeah, like overall, I would say everything is so powerful. Like I'm able to do things solo that would take me a week in a couple hours, and I can increase productivity maybe 5 times or 10 times, depending on the task. But it's a big game changer having all these tools at your disposal. We're integrating a lot into the development pipeline, and I think for us it's not as impactful, I would say, as like, if your startup is doing a website, because we still need human review of every single line of code, but we are using tools to speed that up. Also the review process, building testing for all the different things, and also creation of code. But at the end of the day, every single line goes through a human and everything is checked and tested. So we don't have the benefit of, like, I think Anthropic, they're just cranking it out and throwing it out there, right? Because, so what if there's a bug, we'll fix it later. But for a wallet, you can't really do that. But Alex Bragan, our CTO, he's been pushing this a lot. We have Tobias Wupperfield, he's our head of AI, and he's also implementing a lot of this tech into our whole development pipeline. So I would say we're pretty integrated with all the AI tools right now, and it's definitely allowing us to speed up development a lot.
The final portion of the conversation shifts toward the intersection of AI and Bitcoin. Mow discusses Jan3's Agentic Aqua initiative, which combines AI agents with Bitcoin wallets. The vision is simple but powerful. Instead of manually handling every transaction, individuals could delegate routine economic activity to AI agents. For example, purchasing products, paying bills, managing subscriptions, conducting payroll operations, executing small value transactions. These agents would operate using Bitcoin and stablecoins while remaining under user-defined constraints. Although risks still exist, Mow believes this represents a major frontier for future commerce.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.